The idea here, and we've done this once before on the Claw, is that we have someone who's well known for their market knowledge and content appreciation, is good at the history. And the idea is that we have a little kind of quiz show here, a little game show, and we see who can remember the most about market details going back. I've got a sneaky suspicion you're going to be better at this than me, but let's get started and have a go. So I came up with the first question, and that is, who is Nick Dennis? And give me some of the highlights of his career.
Well, Nick Dennis is an interesting gentleman. He, if I remember correctly, he was the managing director of a company some people may remember, the Imperial Cold Storage and Supply Company Limited.
That
was its full name. ICS was taken over by the, I always remember as the Tiger Oats Company. It's now Tiger Brands Limited.
Come a little closer.
And Nick Dennis eventually became the CEO of Tiger Brands, Tiger Oats.
And in the process, they accumulated a number of different companies like Adcock, Ingram, and so on.
Well, Adcock was always in Tiger. It was always a subsidiary of Tiger, but then under Nick's management, they took out the minorities.
Right.
And Adcock became a wholly owned subsidiary of Tiger. Obviously, ICS had already come into the fold as a wholly owned subsidiary. And Nick built the Tiger company up into a huge organization and then proceeded to break it up. Because some of you may remember, Adcock, of course, spun off as a separately listed subsidiary, as did Astral Foods.
As did Spar as well.
And did Spar. So he then broke the business up and left himself, obviously, in charge of the original Tiger company.
Right.
And then some people say it was related to the bread scandal, but he resigned.
Right.
And
this
today,
was in 2007 or so.
About there, yeah. And today he then went into the twilight zone, but came out of the twilight zone. He's now established a private equity organization.
In any event, so if this private equity group were to bring something to the market and he was involved with it, you would say that would be something positive to be
Yes, it would be. Well, they made their first investment. They have an investor being Standard Chartered Bank. And they bought, if I remember correctly, a sweet manufacturing, a confectionery manufacturing company based in East London.
Right.
So that presumably forms the backbone of what this thing's going to do in the future.
Okay, good. Now you get to ask me a question.
Well, this is an interesting one. I know it has a bit of a retail sting attached to it, but Pick n Pay.
Right.
Pick n Pay, Raymond Ackerman took control of the company in 1967. It listed in 1968. How many rights issues has Pick n Pay had in its history?
Okay, so that's an interesting one. I mean, 1966 was the year I was born, so I'm scratching around down here. I mean, a company of that nature with this kind of question being asked, I would imagine the answer there might be zero.
It's not zero. The answer is actually one. The company had one rights issue in the mid-1970s to raise capital, because remember, they started off in the Western Cape. They then decided to go national, because the only way they could take on the Greatermans organisation, which is where Raymond Ackerman came from originally, was to become national.
Right.
And they moved into the Transvaal. And their first stores operating in the Johannesburg area still operate to this day. One is a corporate store and the other one's a franchise store, to my knowledge. But they then needed capital, so they raised money in the mid-1970s. Since then, they've never had a rights issue.
Which, from your perspective, is a positive, because companies that do too many rights issues, that would be a sign that they're always kind of diluting the existing shareholders, and that'd be something you'd watch for as a potential investment, plus or minus, right?
Absolutely. No, I don't want to go into the details of a company that I'm having, call it, an argument with, a debate with at the present time, is simply because they've issued so much equity. I believe in the longer term it will dilute the value of the listed company's shares.
Okay, here's another one that I think you're going to be able to deal with aplomb, and that is, give me some of the background to the group structure of South African breweries, and in particular, how did it get into the retail environment, and ultimately how did it get out of it, and also what has it been doing involved with things like the gaming business as it is in Tsogo?
Well, it's an interesting story. I remember writing an article. I was commissioned to write an article and we're talking 10, 15 years ago, about the history of breweries. Now, I can't remember the entire story, but the breweries, as everybody knows, started off with, and there was a genuine Charles Glass who invented Castle Lager.
Castle breweries to begin with,
and that's how the company started. They then bought the Line, the company that made Line Lager.
Exactly.
And they made some other acquisitions as well.
In the 1950s and 60s, when those guys were under pressure because of taxes or something of that nature, yeah?
Well, I think the real reason why they diversified was very simply because the currency laws of the country at the time prevented them from doing anything big in the brewery industry. And of course, their capital was restricted to South Africa. They then decided to get into, it wasn't only retail. They got into retail and retail-oriented manufacturing companies.
Right.
And I mean, some of the companies that were part of SA Breweries at the time, and I'm just trying to think aloud, there was Dagama Textiles, which hardly exists today. There was Conshoe, the shoe manufacturing company, that doesn't exist today. There was OK Bazaars.
That's the one I'm thinking of.
OK Bazaars, which doesn't exist today as a company, although the brand still exists as a franchise.
Got sucked into
the Shoprite Group.
Shoprite Group, of course.
So you had that. You had, believe it or not, Plate Glass.
That's right.
PGSI, Plate Glass and Shatterproof, was also part of the group at the time. I'm just trying to think.
And the gaming thing.
Hang on, and then they were in furniture. They had a thing called Amalgamated Retail, which then became ultimately part of the Ellering Group, which of course is into Able today. They owned that as well, and they had Afgol. They had a furniture manufacturing business, which is today, became part of Steinhoff eventually through into something else.
Edgar's off the list.
And I forgot about Edgar's. So they had, they were a barometer of the South African consumer
and obviously
economy.
Now they're shoveling this stuff out and they've gone global and they're in the beer game. Okay, you've got time for one last question, believe it or not. You've got lots there. Pick the best one.
I got a question for one more. Okay, this is an interesting one. What were the components, and this is not retail, what were the components of what we know today as ABSA?
Aha. Okay, now that's relatively easy because I remember my parents had a Volkskas bank account when I was little.
Well, that was one.
So Volkskas was the one. Allied Bank was the other one. Then there was United Building Society, where I had my little savings book. And then I'm short of one. Trust Bank.
Trust Bank was part of it. That's 100% right.
And so this thing gets pushed together, and the brand name ABSA, I always thought it was a terrible one, but what stands for Amalgamated Banks of South Africa. But the long and the short of it is as these brands evolve, it's very useful to know where the strengths were. But thanks, Syd. That's been fabulous. Thanks for your participation in our game show. I think you're going to be a hot contestant for a future thing where we broaden it out a little bit wider.